what this really is about is it really came from kind of an internal need from our community where we were getting a lot of questions and people wanted they wanted a location where they could just, one, communicate with other investors, but two, kind of learn together, kind of have that environment of community, but also learning with other like-minded people. And so that was kind of the vision of the boardroom and where it originated from. So it's really, hey, we want to focus on all things real estate investing. That's what we do. At the same time, kind of that building and protecting wealth mentality. And then a big focus for us at Ridgeline Equity and for me and my wife especially is really, how are we fueling generosity through our investments? That's just a part of who we are. We like to say that every journey starts by taking one step forward and then another. And the reason we say that is sometimes, depending on where you're at in your investing journey, you can see things that sometimes feel overwhelming or confusing, or perhaps not all the pieces are coming together quite right. And it can feel like you just kind of want to stop until you learn. What we have found very successful for our community is that commitment to take another step, right? Whatever that step is. And I thought of a good quote recently: an investment in knowledge pays the best interest. And as I think about, for me, when I started kind of the investing journey that we've been on now for a long time, it started with that education. And I think for most people that are coming into this type of meetup, that's kind of where you're at. You're at some level, right? Either you're already doing some passive investments, or you're already doing some syndications, or you're already doing something else, or you're just trying to learn. But in general, that path that you're on is your own. And I'm hoping today kind of fills in whatever those gaps are for you, which is also why I really want to hear from you. When we picked the title of this, Wall Street Unplugged, yeah, it's a catchy title. It's cool. I like it. But at the end of the day, what we're really trying to get down into is that leap. At least it was a leap for me, right? Of going from this traditional mindset of all my money's got to be in Wall Street to make investments happen, including in my 401k, but coming from there into, well, what are the real alternatives? And so a little bit of today is really going to be on that, my own internal journey, that what I found is that a lot of people can relate to those steps. And so some of today is going to be focused on that. Now, when I think about kind of this whole idea of unplugging from Wall Street, for me, it started because on one hand, it started with, hey, questioning, is the vehicle that I'm using today, is that going to be a great vehicle for where I want to be in the future? And for me, everything comes down to goals, right? Whether you're going to choose this investing path or a different one, whether you're going to look at, hey, do I just need to diversify within the stock market, right? Regardless of that decision, it starts kind of with the goal, right? What's that purpose behind what we're doing? And if we don't have a purpose, well, then to formulate it, right? To write it down, to say, well, this is where I want to be 10 years from now. And to get there in my investing journey, well, these are probably the things that I need to do. And for me, some of that came from the understanding in my financial education journey of how inflation plays in with what I'm doing at that time in the market, right? And so inflation, you've probably heard it referred to as the silent killer of all cash. And that's so true. If your dollars are sitting in a bank account, then you're losing money. I pulled up just the last 20 years of inflation numbers, and you can see those in the chart here. And I was like, okay, if I put $100,000 under my mattress back in 2003 and let it sit there until 2022, right? How much money, or what's the value of money? Because it's really the value of money. Have I lost over that time frame? And it's astonishing that number is around $40,000. So the buying power of your dollar in 2003, which we can remember like it wasn't that long ago, 20 years later, the buying power of that cash, if it's sitting in an account, is $40,000 less than what it was back then. And so it pushed me in this realization of, wow, I've got to find a way to beat that, because I'm never satisfied with just accepting it, right? I want to find a way to beat that statistic. And if your money's not growing, then you're losing it, because inflation is a silent killer. And so with that, I also started digging into, and through the help with other people around me, I've had mentors, and just again on that financial education journey of mine, I started looking at what do I have today, and for me, it was really that 401k. When we started our journey into large scale investing in real estate, most of our retirement, most of our future money that we're going to touch one day was buried in our 401ks. Yeah, and some of it was in the market, but the large majority was our 401k. And so I started looking at, okay, well, how's it doing over time? And when we looked at the numbers, it was actually very close to what you would see in the S&P 500, right? Obviously, I mean, we're in managed funds and things like this, but it was very close to what you would see in the market. Yeah, obviously, you're investing in the market. The thing that attracts us to 401ks is they're super easy, right? You can kind of set and forget. You can log into your employer's website and say, I want to put out this amount of money per month for my paycheck, or this percentage. There's employee matching. There's all this. I can pick some funds. I can pick a mixture of funds, and then I forget about it, right? But for me, I went back and looked at, well, how are those actually performing? What I realized is that volatility, as we call it in the market, is consuming a lot of our profits that we might think we're making. So we can look month over month and we can see, hey, look, we've made X amount this month. And then a few months later, we hit one of these troughs and we're looking at, wow, I just lost so much money in the last, 3 months. And that volatility of the market has an effect. And what I found is that, okay, the typical returns, compounding returns, was like 7.6%. But these have management fees, taxes are in play. And then, of course, there's the big killer of inflation that affects all of our money. And what does that really look like at kind of the end of that same 20-year period? And I was kind of shocked to find that it's quite low, right? The impact of all of these peel away at the number that we're seeing on our journal entry of our investments, right? It's peeling away at that in a way that I personally just didn't understand. And since I know I've got some financial people on the call, I also some friends of mine are engineers. If you really want these numbers, if you're curious like how I got to them, I'm happy to send them to you. We're definitely not going to talk about them here, but if you're just curious, shoot me a note. Always happy to send them. But the reality for me came down to, okay, what are the alternatives that I really need to be looking at, right? So if this is not getting me where I want to go, and that 3 point something percent actual return on what I was doing isn't really getting me where I want to go, well, then what does, right? And so I started doing a lot of research into kind of alternative investments. And I'll focus on the examples first, right? So if we kind of look at, well, what are alternative investments? And the, investopedia.com, right, is actually a great source for education, by the way, if you're not familiar with it. But its definition is an alternative investment is a financial asset that does not fit into the conventional equity, income, and cash categories, right? It just means, yeah, it's outside of the typical market, right? No surprise. So some examples of that are, of course, commodities like gold, silver, and so on. It could be crypto, real estate syndications, which is what all remaining slides from this point forward are going to be talking about. Oil and gas. I've got good friends of mine that are actually in oil and gas. I have other people I know that are invested in some mines. It could be collectibles, could be, maybe you like collecting wine, right? That's an alternative investment. And so naturally, the question becomes, okay, well, let's question that assumption. Is there a different way that I could save for retirement? The common characteristics in these, though, is that number one, they can be fairly illiquid. You're going to turn these investments a lot slower. So these types of investments tend to be less liquid than, say, a stock investment that you could sell tonight, as an example. Yeah. They also, like some of the larger ones, tend to be private placements. And what that really means is just you got to kind of be in the inner circle. You got to know the sponsor. You got to know the person setting up the deal to really get into these types of investments and to even know about them, right? It also requires a bit of investor due diligence. And what I mean by that is not that you have to be the expert on this type of investment or that type of investment, but you at least need to get familiar with the opportunity. And for real estate syndications, as an example, you at least need to know the sponsor and trust them, right? And you need to be able to ask the questions that are going to answer, hey, have we covered the major risks? Have the major risks really been addressed? So that's what I mean by kind of that due diligence of the investor. It's not be the end all be all expert in whatever, investment class you're in. It's really that continuity of this investment, I need to understand it, and are we taking care of the risk, or what are the risks? They also lend themselves to being highly diverse. Typically, or often, I should say, the returns can be, quite higher, say, than in the market. And then some of the some of the most liked potential in these types of investments is really what they do for our taxes. Many of them, of course, everyone knows, real estate is a great, tax machine for you, or ability to defer taxes, as well as in some cases, kind of that tax-free investing, if you want to consider like a 1031 exchange or a deferred sale trust or something like this, right? And the piece that some people don't understand is, as far as I know, all of the items that I've listed here and many more, really, you can use retirement accounts to invest in, including real estate syndications. Yeah. And today we're not going to dive into that. We may actually do it either by the end of the year or early part of next year. We're looking at someone kind of to come in on a panel and discuss that. But the point being is, the reality starts to shift when you start to understand and open your mind further than, hey, I've just got to rely on my 401k or the market. What are the other options from there? Man, there's a ton of options there. I don't have to be the expert in the market or in that asset class. I do need to know the people, perhaps, that I can ask the questions to, and it could give me some advantages in my taxes, and I might want to use my retirement account in it, right? And so this box really started to open up for us, and of course for many of our investors as well. And when I look at all of that, it comes down to have this strategic mind, and a lot of you do as well. It's like, okay, what's that outlook that would really kind of make me want to learn more or dive in a little deeper? And so that kind of strategic outlook is really in the market. My frustration was really the volatility of it. It was looking at, like a heart rate monitor over the years, and you see it just going on and on. And you're like, man, I don't know if next year, if this is going to be a great investment or not. I don't know. This year it looks good, but next year the market may be different. That volatility that we see was a big driver for me personally. And it's also heavily taxed. And I've already talked about inflation. And when I dug into the numbers, I was really frustrated in the moderate returns after I took into consideration the other variables that we talked about above. And then the alternative, it was, okay, what I really wanted stability. I really wanted some tax incentives that would help my money work harder for longer. If my money is working, then that's good. Even if I have to pay taxes on it years from now, at least in this interim period, my money is still allowed to work. That's big for me. Hedge against inflation. If I can beat inflation, that's a huge plus for me. And then, of course, leveraged returns, meaning if I can use leverage on some of my investments, that's only going to amplify the returns that I get. And then let's go back to some of the points that I made above, just to kind of close the loop on a couple of these. So inflation and stability, I want to talk about those kind of together. Earning passive income through real estate typically beats the inflation monster. Now, what do I really mean by that? What's the translation, if you will? And if you look at, and this was a good chart. It's not the greatest chart in the world, but it does illustrate the point. So this is the consumer price index, right? So you have the CPI on the bottom, it's the dark line, and then they also do an index for the rent over time. Yeah, kind of the same idea, measured against the same index here. And so when we look at this, the reason we say typically income producing real estate beats the inflation monster, you can visually see it, right? So as inflation is going up, which it is going to forever, yeah, you can see that typically in the market cycles that we've looked at, as far back as we have looked, typically your rent or your income for this property is also going up, but it's going up at a slightly greater rate. Even if they were at the same rate, because your income is bigger than your expenses, that gap between income and expenses is getting larger, right, for an investment property. And so we're beating that inflation monster through income producing properties. Yeah. And it's primarily because for a income producing property, its value is based on net operating income. So if you can improve that net operating income, you automatically improve the value of that. Yeah. And so that's how we beat it in let's say apartment buildings that we look into. Now, on the other two items I had on that chart, like taxes and real estate, I'm not going to deep dive into this. I think much smarter people than I have talked extensively about tax incentives and advantages for real estate. The only thing I look at is, hey, our the reason we're incentivized to invest in real estate is simple, right? Our government wants us to invest in real estate, right? Because it's good for the communities, right? And that's why they incentivize us, right? So our government wants us to invest in it, because what ends up happening is if you follow the flow of money, you're also following the flow of improvement, if you will. Yeah. So they know that, okay, if people are investing in, let's say, large properties like apartment buildings, then they're improving that product in the community, right? They're lifting that entire community up in such a way that the government can't do on their own. And so they're going to incentivize that. And so they do that through tax deferral. They do that through this program called the 1031 exchange, which is where you can take all of your profits when you go to sell, and you can roll it into a 1031 exchange and put it into another property without getting taxed on it, and so on, right? Now, the returns from all this, just looking at, okay, when we talk about taxes, that's awesome. For me, my money's working harder for me longer. That's what I want. On the return side, and these are typical. If you've been a part of any other presentations on real estate syndications, these are not going to be surprising. They're of course never guaranteed, but these are the ranges that most people are targeting, right? So an equity multiple of 2 times within 5 years. In short, the clear English on that is you double your money in 5 years, right? That's their target. The average annualized return. So if you look at the investment period, all the money that came into you, that average return somewhere in the teens is very typical. Some people advertise much higher than that. You need to be cautious in these numbers, and that's where that diligence comes in for the investment. When you see these types of numbers coming in, as a savvy investor, you'd probably just want to ask questions. If it's in that 20% mark, hey, did you mitigate these risks, or what are the biggest risks? How are they being managed? These types of questions, right? As we talk to our investors, it's the common theme, right? I'm not unique by any means, and the areas that I'm looking for my future investments and why I'm looking for those may be different. My goals may be different. But what's driving us kind of into these income producing properties or real estate syndications like apartment buildings is really those main key areas, right? So a typical investment structure within a syndication, you're going to have our investors, we call them limited partners or LPs. You're going to have the sponsors, or we call them general partners. But those are the people that are coming into a limited liability company, typically is formed to purchase the asset. So we purchase the asset. We have an LLC. That LLC provides that separation, right? That limited liability, right, to our investors. Should anything ever happen, our investors are kind of separated from that. And then it also creates this format where we can create truly passive investors that are coming in, that are bringing the majority of capital into the deal. But then on the other side of it, the sponsors or the management team, if you will, of the deal, and those people are really doing the day-to-day business, right? They're managing, hey, this is our business plan. Are we executing on that business plan? Do we need to hire or fire, our property manager? How do we need to move this forward for the best interest of our investors? And that's really that management team there. And a typical split is really going to be, it's the, the normal like 70-30 split, 70% to investors, 30 to the general partners, or 80-20. And there's many variants in between those as well, right? These are the most typical. And so for the investor, the attraction there is really that fully passive mindset. And for most people that are seeking this out, it's because they see the value in real estate. Could be one of the things we've already talked about, whether it's taxes or whatever. But they see the value in this type of investment, but they really don't want to invest their time, right? They don't want to go buy a single family home so that they get the phone calls on the weekend about the toilet that blew up, right? They want to invest in real estate in such a way that they still get the advantages of it, but they're not doing all the work. And that's really where this type of investment through a syndication structure comes in, is that all of the benefits, the profits, the tax incentives, and the equity when we go to sell, all passes through the entity to the investors and the sponsors, right? So things like depreciation. If you made $10,000 on a passive investment, this year, but you had $10,000 in depreciable assets that you could write off from, as an example, of syndication, then the government thinks you made $0, as an example. Yeah. And that's why we point these things out, is because all of the benefits, not just the income, not just a return to the investors, but all the benefits, including those tax incentives, come through to the investors. It's one of the more powerful reasons that people look into those. For me, this became our preferred path. It's also why we launched Ridgeline Equity. And that path for us really came from that kind of progression from, hey, if we're looking at the market today, what are the alternatives to that? Inflation is killing us. Taxes, everybody's always going to get taxed, but can we do anything about it? Right? Can we do something that's going to help us in the tax game, so that our money that would be taxed is able to live longer within our pockets, or within our accounts, or within our investments, in such a way that it can also earn income instead of just handing it back over to Uncle Sam. And when we started looking at these, we opened Ridgeline Equity. Our journey led us to, hey, we can actually help people along this same path. We can help people invest in real estate through the syndication model. We can do all the work. And we can also really impact communities, which will probably be another discussion for another day, but we're seeing tremendous impact in the communities that we've purchased. And that was kind of the launch point for what we're doing. And what we realized is, okay, we think it's awesome. We think it's great, but it's also not for everybody, right? It's not the end all be all for all investments, right? But it is for some. And it allows you these larger diversified investments, right, where you're taking advantage of the economies of scale, where you can conceptualize it simplistically as, if you buy a single family house, if you buy 100 of them and they're spread all over the city, well, that's a lot of work driving to and from. There's a lot of roofs there. There's a lot of plumbing issues. There's a lot of air conditioning. Now, what would that look like if it was all under one roof, right? That's what we mean by economies of scale. They're much easier to manage. The profitability tends to be a little bit more because of these larger and diversified opportunities. And then also, really, the strong driver is that kind of that fully passive approach, right? If you can take time to spend with your family in the mountains and you're still earning money in real estate without having to worry about picking up the phone, that's a huge attraction for people. Plus, it's professionally managed. You have a team of people working for you on this investment, right? And their vested interest in making this investment perform, right? And then, the bigger need on it, and some people kind of see it as a risk as well, is you need to have a high trust in the sponsor, because they're the ones making the decision. Because this is fully passive, you have a team of people that's responsible for making those decisions, for running the asset investment, for executing the business plan, for the entire community that's invested there. Yeah. And then, as we discussed up above, of course, the taxes, the leverage stability, a great hedge against inflation, because your income is typically outpacing inflation. And then, if there was a negative for some people, It's the illiquidity, right? For some of these alternative assets that you're investing in, you're in this kind of illiquid space, right? If you're investing in an apartment building, your money's going to be tied up for like 5 years, but that's also part of the what you're buying into to achieve those typically higher returns is a bit of that illiquidity so that this property can go and perform, can grow in value, that we can complete renovations, that we can grow that net operating income. That takes time to execute that business plan, right? To get those better returns. I want to jump into kind of how to stay connected. So we're doing these monthly now. We may fit in a few others. And our intention is really to try and answer those longstanding questions that people have. Hopefully by the end of the year, we'll bring in a CPA to talk all things taxes and real estate for you guys to help answer some of those questions. Hopefully either within this year or maybe beginning of next year. We are planning to bring someone in to talk about how to use retirement funds, how to structure that so that you can take perhaps, which is what Nikki and I did, take some of our retirement funds and move them into still a qualified retirement account, but use that for investing. So we're looking at that in the future as well. But in general, I go back to, we created this to fill a need within the community where several people wanted the opportunity to connect. Yeah. And the reason I bring that up is if you have people that have kind of been on the outskirts of investing in real estate, or they have questions, or maybe you're already, 10 steps ahead, but you're just trying to find a safe place to bring people where there's kind of no sales pitches, no pressure type environment, but just, hey, let's get educated together. I'd encourage you to send this to people. It's open to everyone. It's not just open to our personal community here. We have a lot of people that watch it after the fact as well. So when you register, you also get the follow-on email for people in case they were busy during the day or had other meetings they couldn't attend. So please do invite your friends if they're interested. We really want to build our community from within, right? People find us on social all the time, and that's great. But we really tend to enjoy building our investors from within the community itself. And it's just a great opportunity, right? And then the next point is, we're being pretty cautious right now on our investments and the criteria that we're looking at for some of the reasons I mentioned about one of the questions before. But at the same time, we are looking at deals all the time. Yeah, and there's a couple that we're looking at today. My point is not to drive drive interest necessarily in these deals. My point is the people that see these deals are really only within our community, right? I get asked all the time for people that I meet, whether it be at conferences or wherever, hey, how do I get access to that deal, or how do I see what you're doing? And really the answer to that is simple. You just need to join our community. You can go to investwithbrady.com and it'll bring you straight there. If that email address or if that website's easy for you to remember, hopefully, investwithbrady.com will take you straight there to an investor forum. And with that investor forum, and I'm wrapping up here, so we'll jump to any remaining questions in a moment. But really, we just need to get to know you. There's certain rules and legalities that we have to follow because we are governed by some of the SEC rules there. And we just need to start that relationship with you, right? And beyond that, beyond the legal side of it, right, is really, I sincerely want to know if we're a good fit for where you're going. Or I want to help you understand or better clarify some of those goals if you need it. Some people are crystal clear and they're laser focused. Some people are more curious and they need those kind of extra questions to be answered. And that's a great way for you to get those questions answered as well. Or you can, scan the QR code. And I'm happy to jump on, coffee over Zoom with you and help answer any questions that maybe we didn't touch on today. So thanks, everybody. Really appreciated your time and taking a break over lunch with me. Thanks. Have a great day.